Welcome, ladies and gentlemen. Thank you for your patience as through the technical difficulties. Welcome to our first official EB crypto get-together. Many of you may not be familiar with Elevation Barn. Most of you are, especially if you're watching this. It's an amazing community of people who are reflecting upon themselves, and we're going to look at how that is important in this whole process. And everybody who's not familiar with it is from our crypto community, and we meet up every week to learn about, like, what is crypto? Why do people want to buy it? Where does the value come from? How to participate in a way that avoids you having issues. So we're going to go through all of that. While we also turn on our 360, this Death Star looking thing. This is a 360 camera, so it's going to record everybody at all times. We're really sorry about that. You guys won't be able to see it in the recording here, but we'll have a metaverse VR version of this talk that will probably kick off from halfway through me speaking. So that's going to be a fun little experience. Hello, welcome. Are we ready to go, Vlad? YouTube editors, please make sure you cut this out. And we're going to repeat a little bit of this intro. So this process that we're going to go through is a process that I noticed a lot of people needed to go through in my journey, right? So I met so many people here that wanted to participate with crypto and wanted to get involved, but you don't really know where to get started, right? Because normally you go on YouTube and they say, buy this coin, and buy that coin. And that's actually the worst place to get started, because you're taking your own money and you're putting it into something, and you end up either listening to a friend or you end up listening to somebody else. So it doesn't end up being the kind of experience that you would hope it would. So we came up with a process that helps beginners understand why this thing is even worth buying. Is this thing ever going to turn on? It just says testing.
It's testing. Currently, it's testing the SD card, and then we get
to. Let's forget about it. Sorry, the metaverse is canceled, ladies and gentlemen. Apologies. So, welcome. Thank you for being here, digitally or physically. We are going to go through what is crypto and why it's valuable. My name is Sim, like a SIM card in a phone. I've been named after technology, so I know a thing or two about technology. I have been in crypto since 2012, and I've now had the privilege of advising companies and governments and groups and communities on how to participate in this space. So I would like to think I know one or two things about it, and I've just Googled it more than the average person, so I feel like that counts for something. So what always ends up happening in crypto is people start to look towards it when it becomes the hype, right? When it goes in the news, now Bitcoin's gone up a lot, so a lot of people become interested in it because you hear about it, and you hear about the profits that have been made. Yet, that is exactly the wrong time to enter crypto, when everybody hears about it, right? So in order for, at least my experience has been that it wasn't until I built a plan for myself that was clear to me and that made sense to me before I could actually have success in crypto. And the people who don't have a plan end up failing, right? Failing to plan is planning to fail, as they say. So what is crypto? Why do people want to buy these coins that are just magical numbers on a computer somewhere, right? In order to understand that, I would love for us to just go through, firstly, just my personal journey, right? I was an electronics engineer in studying to be an electronics engineer in 2011. In 2012, one of my friends came to me and he said, hey, you really want to look into this thing called Bitcoin, right? And I read the white paper, and it became patently obvious to me at that point that this is going to be the future of the internet. Obviously, I started telling everybody around me. Nobody could understand it because it didn't even sound like English, the stuff that we were saying. So nobody listens. And I kind of just left it. But then in 2013, it just went from a few dollars. When I started, Bitcoin was $5. It went to $200 without us even noticing. And then we all started paying attention. We're like, hey, this thing is supposed to protect us from the banks. And Cyprus bailed in the banks right at that time when it went to 200. And then it crashed from 200 down to 50. We were like, oh, we missed it. We missed the train. And then we stopped paying attention to it. Then it went from 50 to $1,200 without any notice. That's when I really started to pay attention. I was like, wait a minute, this thing just went from $5 to $1,200. Like, anybody who caught that as a wave had life-changing money. And then it crashed from $1,200 back down to like $200, right? That got me interested into it as a financial product and as an investment. But even more than that, I really started to dig into what it is as a technology and what it actually does. And the next thing I noticed is nobody speaks about it in English. They talk about it in Kringlish, like crypto English. It's decentralized and it's the blockchain and the future of immutability, and it is creating autonomy. And you're like, sorry, I have to Google each one of these words that you're saying, and I still don't know what this thing means, right? Long story short, then I come to Bali. This is 2020, 6 days before COVID. And crypto is starting to move up. And so a lot of people want to participate, but those people they still can't understand what they're buying. And what I saw is too many good people getting scammed. Too many good people going into this thing thinking that this is a place to get rich. They put in the money at the wrong time because their friends told them to put it in there. And the next thing that happens is crypto drops like it does, and those people lose the money, or they put it into scams, or they put it into different things that they don't understand, right? So I decided I'm going to start teaching people how not to get scammed. So that's been my journey from helping people not get scammed. Then it turned into companies not getting scammed. Then we went to G20 and spoke there. Then so on and so forth. Things kind of had legs of their own. But along that way, I realized the place we want to start when understanding what crypto is as a technology is to understand the world of value first, and then the world of technology, and then the world of crypto. So that's where we're going to start, right? Because money is just a transactional mechanism of value, right? In simple terms, I always say it like this. I'm like, money is just a storage mechanism of love. That what we do is we go do something valuable for somebody's life. We show somebody love to a point where they're willing, it adds so much value and love to their life, they show you love back by giving you this thing called money that is a stored version of the love they've shown somebody else. And we bring that money home and we show love to our families, we show love to ourselves, we show love to everybody around us by giving them food and shelter and all that stuff. So money is a storage mechanism of love. Crypto is also a storage mechanism of love. So the way we used to generate money in the old world, and by old world I mean like 10 years ago, the ancient, back in our grandparents' 10 years ago days, actually technically about 24 years ago, before the internet took off, the way value was generated in the world was you would need to do a business that did two things. One of two things. It either created a product or it created a service. So you had to create things that are valuable for somebody and sell it to them, or you had to provide a service that was valuable to somebody, right? In that world, if you wanted to add value to more and more people's lives, you had to scale your business accordingly. Like Ford was building cars for 100 years. They started by building a few cars, and then they have to get more material and more investment and a lot more capital deployed for them to get to the stage of building 100 cars. And then to build 10,000 cars required so much more. And to build 1 million cars required a whole different level of investment. So it was a very slow process to get to there. Services, if you're a massage therapist, you have a limit for how many massages you can give. If you're an accountant, you have a limit for how many clients you could meet. You have to get more resources, more consultants, more everything to be able to scale that business. That's how the world worked for up until the 2000s. In the 2000s, something weird happened. People started connecting computers together and programming those computers with websites. And those websites could add value to 1,000 people's lives, 1,000,000 people's lives, or 1,000,000,000 people's lives with basically that same website. You didn't have to build new things to be able to add value to somebody's life. That was a transition to a way of generating value called the, it follows Metcalfe's law. Metcalfe's law. It's a network value model. We went from just goods and services being the value that we generate to the network itself being the value that we generate. So then the guys at Google hooked up a bunch of computers together, programmed one website, put one algorithm on it, and it started helping millions of people and then billions of people, just that one website. And they just had to connect a few more computers to make it happen. But in the end, the ability to go from servicing, helping, showing love to 1,000 people, to 1,000,000 people, to 1,000,000,000 people was almost nothing, right? In that world, that's the world we've lived in now, where one human can just go on the internet and set up a company and click a few buttons that is able to add value to so many people's lives that those people can then generate value back. Now, what happened is that Google owned the computers. Google paid for the electricity. Google built the website. So Google got the $1 trillion that were generated, rightfully so, right? That's how the world has worked. The world we're moving into is this blockchain world where it isn't just one company setting up computers in one place and making all the money. It's many different people and companies setting up computers in many different places and generating value. So we're going to get into the details of that. We're going to show you exactly how that works. So in this world where the ability to be able to add value to 1 billion people's lives overnight was given to an individual, just with the tips of our fingers, we could do that. The rate of change has accelerated to such a degree that the times we're going through today are being called the exponential age, where growth happens at an exponential level rather than at the slow level that it used to in the old world. In that world, crypto is the mechanism that's built for the future, not for the world that exists today. And this is why it gets so confusing, because we look at crypto and we try to position it in the paradigm of the world that we come from, right? The world we come from, it's like when I buy things, when I invest in things, I should be able to hold it, right? I like real estate because I can feel it, I can hold it. Cash used to be money that we could hold. Then cash became digital and we couldn't touch our money. Our stocks turned from, stock certificates to digital versions of them. So everything just became digital. Businesses became digital. Amazon is just a digital business, or technically a digital business that beat all the physical businesses. So the digital side of things started to grow at a way faster rate than the physical side of things. Now it's getting to a point where the rate of change is accelerating at such a fast pace that we're going exponential. That with the launch of AI and all these technologies, the next 5 years, we're going to see more change than we've seen the past 3,000 years of history, right? Now, what does that have to do with crypto? We are moving into a world where intelligence has been made digital. We literally have a metaverse VR camera, hello to everyone who is watching, that I can walk around, that somebody's going to be able to put a headset on and watch this and experience this space in a digital realm. We are building businesses that are digital. We are already meeting digitally. Like you guys are, we have Texas here. Like I'm in Texas, Texas is in Bali, right? So we are already in this digital space. Now, what isn't in this digital space is our money. Our money is actually, the only way it's digital right now is that it's a number on a screen that a bank makes show up. But actually, a bank is just a bunch of computers connected together, right? The bank has a bunch of computers, and the computers run a ledger saying, you have this much, you have this much, I have this much. And if we want to send it to each other, let's say, is it Sam from Texas? If I want to send it to Sam, if I want to send $1 to Sam, it might take me a week. I literally just sent some money from Canada, and we had the holidays here, right? We had the Eid al-Fitr holidays. It took me a week and a half to get $2,000 to show up here, right? That is such a slow rate for the world that we live in. We need money to show up instantly. So actually, the only thing that hasn't been digitized fully is money itself and value itself. So what is crypto, Sim? Are you going to get to the point, or are you just going to keep beating around the bush? I'll get to it. I'm getting there. Hopefully that helped a lot, okay? Crypto is just a new way to connect computers together. That's the simplest way to look at it. This old world we're describing, and old world, I mean like the last 24 years, which is considered the modern world. In our world, it's already the old world. This internet age that we've lived in was built on computers being connected together, like this, just like that. Google owns that big dot in the middle. Google has computers hooked up that help billions of people. Google makes all the money. That was a centralized internet world that we come from. Blockchain is just a new way to connect computers together. So instead of hooking them up in one place, we have them hooked up all over the world. There's millions of computers being run in millions of places. Bitcoin has its own set of computers. Solana has its own set of computers. Ethereum has its own set of computers. They're connected everywhere. Some of them are people running it. Some of them are companies running it. Some of them are groups running it. Now, those computers do the same stuff that the old computers did. They still run apps and websites and run data and all the stuff that we do in the world anyway, which is really the real world valuable stuff. But since no one entity owns those computers, the people who are running the computers, they're paying for the computers, they're paying for the electricity, they're paying for the cooling, they're paying for the labor, they're paying for all of the stuff. They need to be compensated back to pay for all of that electricity and usage and computer systems. So in this world, in the old world, in the centralized world, we would take dollars and we'd pay a company to be able to use their stuff, use their apps and websites, right? In this new world, we have these things called coins, crypto, right? If I want to use the Bitcoin computers to move my money through the Bitcoin computers, I need to have some Bitcoin to pay the person running the computer. They're the miner. If I want to use the Ethereum network to use an app that runs on the computers of Ethereum, I need to have some Ethereum coin to be able to pay the guy. And that's where the price gets priced in dollars, where I pay the guy, he turns around and turns it into dollars, and whatever the price the market determines that coin is valued at in dollar terms, that's the price that we look at. Does that make sense? Bunch of computers connected together all over the world. We got to pay them, so we pay them in these things called coins. Now, effectively, that coin is owning some of the productive capacity of those computers, right? With Google, you could own a stock of Google. With the old internet, you couldn't own a piece of the internet. You couldn't own the computers that run the internet. You couldn't own the pipes that connect the wires that connect the computers together. In this new world, you can literally, if you hold that coin, at a later time in the day, in life, we will be able to use that coin to use those computers, to pay for the usage of those computers. So now, if you think that in the future these computers will be more useful than they are today, then the price should go up. Therefore, it's something worth owning. So all we're doing when we're buying crypto is we're either owning a coin that lets us run the computers themselves, or we own a coin that allows us to use one of the apps that run on the computers. So say the computers have their own coins that you're like Bitcoin, Ethereum, Solana, Cardano, XRP. All of these are layer 1 computers that's owning a coin that lets you run the computer. Or the crypto project is a DApp, decentralized app. And the coin that we own to that project allows us to use the app itself. And it might do finance. It might just be a joke. It literally might just be a joke. It's a meme, and it's nothing more than a joke. But we buy it because jokes are funny these days, right? Money has become a joke. So if blockchain is just a way to connect a bunch of computers together, what is Bitcoin? Bitcoin is a bunch of computers people are running across the world. And these computers do one thing. It just has an accounting book that keeps track of how many Bitcoins each person has. That's it. Bitcoin is one of the most useless crypto projects in the world. Literally, it does nothing. The only thing Bitcoin does is exist and move, right? It's limited, yes, it's limited. That's why we love it. It's the original version of this system being deployed, but all the literal computers are doing is they're running a book called a ledger, right? And the computers keep track of how many Bitcoins each person has. And then if I want to move Bitcoin, if I want to send you Bitcoin, I then ask one of the computers, hey, change one of the ledger entries because I want to move this thing, one of my Bitcoins to Araz. So I go to a computer and I ask, can you please change the entry for me to send it to Araz? The computer goes, give me a little bit of Bitcoin so I can pay for this transaction. That's the fee. And then the computer issues a thing saying, hey, I'm changing the accounting book so that SIM has -1, Araz has +1. This accounting book is running on every single one of the computers. That's the beauty of the system. That this accounting book isn't just on one of the computers. It's running on the same accounting book is on all the computers. So then every computer that runs Bitcoin in the world needs to change their entry to say, now Araz has the Bitcoin and I don't. Now, if somebody messes with one of the computers, doesn't matter. We got 1 million other copies of this accounting book that's running. That's why governments can't mess with it. That's why banks can't mess with it. The system just runs itself. No humans can mess with it. And we can verifiably say that I had it, then I sent it to you, and you can go and read the ledger on the blockchain. You could read the transactions and see, okay, that transaction happened at this date. So Bitcoin's super valuable because now it's a place for us to be able to put our money into something that's limited, that can't be messed with, that is a good place for us to put our money. Other than that, what does it actually do? Nothing. It's like gold. It's completely useless. I mean, gold, at least you could like hit somebody in the head with or something. But like this thing, you can't even hit somebody in the head with, right? Which you shouldn't be hitting people in the head, but I'm just saying functionality-wise, right? So if crypto is just a bunch of computers running, and these coins allow me to pay for the usage of these computers, and you're saying like the more useful the computer is, the more the value of the crypto should be, then why does it do this? Where it goes 0.8 of a penny, multiple dollars, crashes. And then it goes dollars to thousands of dollars and crashes. And then $3,500 to $70,000 and crashes. Right? At one point, people think it's worth $3,500, then nobody wants it. Then when it becomes worth $70,000, then everybody wants to buy it. Why does that happen? What is actually happening is we are going through this transitionary phase from the old world to the new world. In the old world, making dollars was the point of life. That you would make dollars and you could rely on the value of the dollar being maintained. Right? We would spend our hard-earned time and money and life leaving our loved ones to go somewhere else to do something valuable for society so that we could earn these dollars and we could put them away so that later on in life when you needed those dollars back to add value to your loved ones or to yourself, you could actually use them. And you could rely on the value of the dollar to be maintained in some capacity. The world we're going through today, that's not the case. 40% of the dollar's value has been, 20% of the dollar's value has been decreased in the last 3 years, right? So earning dollars has become much less valuable. Owning assets is the thing that's become more valuable. So in simple terms, the governments are printing money to try to save the world. Every time they print money, crypto goes up. Every time they stop printing money, crypto comes down. And this is the wave. This blue line is a representation of the interest the Federal Reserve owes on their debt over the next few years. Okay, this is 2024, 2025, 2024, 2025, 2026. The white line is how much money they print in history. So every time the Federal Reserve, the central bank of the US, has to pay its own debts, they come up with an excuse to print a bunch of money and they flood it into the system. 2020, this weird thing happened. Everybody started coughing, so they had to print a bunch of money for this cough. And that caused crypto to pump the way that it did. Real estate went up, crypto went up, houses went up, everything went up because they printed a bunch of money. Since 2021 until now, assets have come down, everything's come down because they slowed down the money printing. Over the next 2 years, they are going to print so much money, it's going to make numbers look ridiculous. This data is showing that they have to basically print the entire world's money supply over the next 2 years. And that is going to send crypto to numbers that don't make sense. Now, the vast majority of people will lose all of their money. Even in this process, not understanding what's going on, they will buy it at the wrong time. Like now, nobody expected crypto to go to $70,000 today, right? Yet it did. When it was $15,000, I was screaming from the rooftops, buy it now, buy it now. Nobody wants to buy it. Now it's $70,000. Now everybody's running to the shop and they're like, Sam, I want to buy it now. And I'm like, please do not buy it. If you're watching this, please don't buy it right now. Whenever this launches, it's it's like $63,000 right now. Please don't buy it at $63,000. Let it correct. It's going to come back to a better price. Then buy it. Then it will go to some insane place. Now, please just don't buy crypto. Thank you. We'll see you next time. I appreciate you guys' time. Please just don't buy crypto. Because if you don't know what you're buying, you're going to lose all of your money. That's a rule of life. Never put your money somewhere where you don't understand, because somebody who understands is going to take all of your money, right? That's a fact of life. Please first learn about what you're buying. Then build a plan on what you're going to do. Then strategize and make sure you understand the steps that you're going to take. Then buy a little bit and lose that. And then try to buy a little bit more, right? That's why even just this reflection, once you go, oh, wait, this is just a bunch of computers connected together, that makes perfect sense. Last time we connected a bunch of computers together, it became the internet. I remember how that was. You know, some of you guys are too young, but you know, back in my day, Jason, you especially, like your generation doesn't even know what it's like to not have the internet, you know? But when the internet came out, nobody understood. We just looked at computers and websites and we just went .com, .schmom, like whatever, wrote it off. And then what did it do? It took over the entire world. And you know, you either got on or you became the Kodak and the Blockbusters of the world, right? So this time around, we're hooking up computers again. We're doing this new confusing thing with the computers. If you understand and participate, you're going to be on the wave. If you don't understand and participate, you're going to go through the .com bust side of things and you're going to have that experience, right? So, bunch of computers connected together, cool. It has websites and apps running on it that do a new bunch of funky stuff, great. It's a way of value being able to move instantly, so we don't have to wait 2 weeks to move money across the world. It can move instantly, right? That's something that's valuable. It goes up and down because they just print dollars by day. I mean, central banks and companies and banks print money and pump it into the system. When they do that, the numbers go up. When they don't do that, the numbers come down. When they do that again, the numbers go up. That makes perfect sense, right? You guys still here with me?
Yeah.
Whew, okay, we made it through a tough part. Now, okay, if you want to enter into crypto, the number one thing that you got to look at is what is your reason to enter into crypto? When I ask people that, I'm like, what are your goals? People are like, I want to make money. I'm like, you and everybody else, right? Everybody wants to make money. That's not a goal in life. If the goal in life is to make money, that's not life itself. So in this, what I just talked about, if you want to participate in the right way, you have to build a strategy. And now we're getting to the steps of building that strategy itself, right? So we have to define our goals. You have to know what you're going to do. And then you have to understand the risks of what you're doing, right? And you got to align the goals with the risks. So what is risk? Would anybody like to answer that question? What is risk? Sorry, let me get you this mic. Yes. Stop reading this.
No. Yeah, the risk is the probability of something to happen. The risk of this to happen is the probability.
Okay.
So you can have a high risk and a low risk, which is different from danger. People misrepresent danger and risk often.
So danger and risk are different.
Yes.
Risk is the probability of something happening.
Yeah, and the danger is how critical it can be.
So how bad it can
Like, okay, if I take a walk
Yep.
In the mountain, you know, the lowest part of the mountain, there is low risk and low danger. Okay, if I go high in the mountain, but I am surrounded by people who knows high mountaineering, and I have the right equipment and the right training, okay, the danger is very high, but the risk is low.
That makes perfect sense.
Okay.
Yeah.
Now, if I start running, with no equipment, no people around me, still in the low mountain, okay, danger gets high.
That makes perfect sense.
So
risk is the probability of something happening.
it's a probability.
It doesn't necessarily mean danger, but if something bad is going to happen, then that's
Exactly.
where the danger comes.
Exactly.
Thank you. Thank you. It's okay. This is going to new people. You can re-answer if you like. Let's just go with that. Let's go with that. Like, in order for us to participate in a space, we have to understand the amount of risk that you're taking, right? It's like none of us runs out into moving traffic because the risk is you're going to get hit by a car, right? But we do cross sidewalks because we understand that in this space, for me to enter the road now makes sense, right? Risk is the probability of something happening, the way we look at it. Risk in markets is also reward, right? If you take the risk of actually stepping onto the road, then you get the reward of crossing the road and getting to your destination. Risk in this kind of dynamic can also be thought of the risk of you losing all of your money. That's how you should be thinking about the risk that you take in the market, right? When I invest in something, what is the risk that I lose all of my money? That is proportional to how much reward I could get if I do risk this money, right? Crypto is absolutely the highest risk place you can put your money in the traditional way of thinking about risk. Because, people think, okay, real estate is a safe place to keep money, right? Gold is a safe place to keep money. Turning it into, my dollars and then putting it onto some digital exchange and turning it into a coin that I can't touch and then moving it onto a USB key that I don't even understand. And buying some coin to some project, to some app that's being built by something, there's so many levels of you not understanding the process that the risk of you losing all your money goes very high, right? But the world has changed 100%. The world is today backwards. We're living in the upside down land, right? Schools make kids dumb. Hospitals make you sick. Food has become the poison, and medicine is toxic, right? In the money space, dollars have become pointless to hold. What? Nobody wants to hold dollars anymore? Like, I thought that was the whole point of this, this whole wealth generation thing. Dollars don't make sense. You don't own anything. You don't own stocks. You don't own bonds. You don't own futures and all these products that people get. You don't even own the real estate. The country owns the real estate, and they give you the privilege of putting your name on it. You don't own the money in the bank. You go to your bank and you go, hey, can I have my money? And they go, why? They're like, because it's mine. They're like, excuse me, it is certainly not yours. You signed paperwork saying that's not your money. That's our money that you would like back. So wait, the risk of me having real estate was very low unless I'm Russian. In which case the risk went insane one day when the US just decided to take all the Russians' real estate, right? The risk of me being in Canada and being safe was, the risk of me being in danger in Canada was like nothing. Unless I went to a protest and said something that the government didn't like, and then all overnight they just took everything, right? So the world of risk has completely shifted. In this upside down world, actually crypto to me is one of the lowest risk things that I can put my money into. Now, the likelihood of you losing all of your money in crypto is like 90%, right? And even with that, I'm saying, if you really understand what's going on in the world, I don't know any better place for me to be able to hold my wealth myself. because if I can maintain it, I get to custody my own wealth and nobody can take it from me, right? But the risk ranges have been turned backwards. So for the vast majority of people who come into crypto, you're coming from the traditional world, please, please, please take the lowest amount of risk that you possibly can. Like, just don't lose your money. That's it, right? My recommendation is everybody who focuses on just not losing their hard-earned money in crypto crushes it. You just simply don't lose your money and wait on the sidelines, and you will do great. Okay, so here's a very simple strategy to follow to have insane success in crypto. Step number 1, learn about what you're buying. We're doing that. Step number 2, don't buy garbage. Now that one's easier said than done, because 90% of cryptos are scams. They're worthless, custom-built scams that are going to lose all of your money. Out of the 10% that exist that are legit cryptos, 90% will still fail just from the law of averages of startups. Out of the 1% that's left, those are the cryptos that are going to actually be the base layer of the future of the world. So learning how to pick the right ones is key. But okay, 1, learn about how to pick the right ones and how to participate in this space. 2, don't buy garbage cryptos. As long as you do those 2 things, here's the simplest step. Don't sell it lower than where you bought it. Mind blowing, right? Thank you. It's master level shit, you know. But that's the idea, that you buy stuff that you understand. You buy things that are genuinely valuable, or you can at least understand the value of it, and don't sell it lower than where you bought it. If you just do those things, it's impossible for you to lose money in crypto. Now, understanding when to buy it and all that stuff is what we're going to be going through in these conversations. We're going to bring on experts to give different viewpoints and all that stuff. But so in that process, if you're thinking of entering crypto, then please decide to take the lowest amount of risk of not losing your money. Take the lowest amount of risk of losing your money and go through one cycle, and then you realize what this game is, and then use the profits to be successful on the other side. Okay, so let's say I know my risk profile is low risk, but how do I know which crypto is which risk, right? We're going to go through the details of how to pick the cryptos themselves, but here's a simple way of thinking about it. Bitcoin is valued at $1 trillion right now. Its market cap is at $1 trillion. You can literally go on internet and go Bitcoin market cap and see what it is live. If it's valued at $1 trillion, $1,000 billion, then there's a lot of people who have done a lot of research and put their billions of dollars into it that have made sure that it's safe, right? This isn't just a blanket thing to do, but just a modality of a framework of decision making is, okay, if the world values it at $1 trillion, that probably means there's about $100 to $200 billion in there. Whoever put $100 to $200 billion of actual money in there has probably done the research to make sure it's safe. So I can rely on that more. So my framework right now is $20 billion and above is low risk. If you want to be really low risk, $50 billion of market cap and above is low risk. $1 billion to $50 billion market cap is what I consider medium risk. Anything valued at less than $1 billion is high risk. Simple as that. Now, have there been things that were valued at $50 billion and they went to zero? Yeah, it was called Luna. It was at $50 billion market cap when we went to zero. But most of the time when things are in these ranges, these are the risk ranges we can look at. And then we're going to go through a bunch of details on how to lay out the specifics. Now, look at your portfolio. If you're already in crypto, right, look at your portfolio. Look up the market cap for each coin. And if you have most of them in a certain range, then you can understand your own risk profile. Because what ends up happening is I ask people, what is your risk range? And they go, yes, I'm a low risk person. I'm like, fantastic. Show me your portfolio. And it's like, I bought this shit coin, I bought that shit coin, I bought this shit coin. And their decision making is telling you that they're actually a high risk person, but they want to be a low risk person, right? So what is your risk tolerance? You can also think about your own risk tolerance, like how much risk do I take in my life? You know, do I love going dirt biking and skydiving? And have I always bet everything? Yes, Vlad's laughing. He's like, yep, love it. Tell me more about that. It's like, you know, how many times do you almost die? A lot of times, every day, right? So then you, sir, are a high risk person. So you can go to sleep knowing that you've taken high risk and you're fine. You sleep really well. Now there's somebody else, Grandma Betty might be, you know, super anxious. She's spent her whole life earning this money. And when she bets it on something, if she loses, she's worried about losing it and she doesn't take very many risks in her life, then she should not be in anything high risk in the crypto world, right? So you understanding your own risk profile and then understanding the risk of the things that you're buying is crucial. And hopefully these things help you understand that. Then it's like, okay, how much am I going to invest? That's always the question. How much do I put in? And for a complete newbie, do just put in what you're willing to lose. If you're just entering this and you haven't done a plan and you haven't gone through the process, please only put in what you're willing to just throw down a well, right? Because you probably learn along the way. If you're somebody who's experienced and you're like, look, I genuinely want to make this part of my portfolio and I want to understand this at a deeper level, then my recommendation is always, okay, imagine this. Imagine there's an amount of money that you put somewhere and you can't touch it for 4 years. For 5 years. For 5 years, you cannot touch this money. Does it change your lifestyle? What amount of money, if you were to put somewhere and you couldn't touch it for 4 years, 5 years, and it would not change your life at all, that's the amount of money that I would recommend investing in crypto. Obviously, please, pardon? Up to, yeah. And please don't just watch this and do all of this. Like, this is just an example. If you just blindly do all this stuff, you're going to lose all of your money. Like, honestly, you're going to lose all of your money. And we're going to give you the tools to be able to do this for yourself for free. But just please don't just rush in right now. Okay? How much money to put in? Whatever money I could put away for 4 years and not need it. That's the maximum amount of money that I could put in. Then out of that, I select an amount and I go, okay, if this is the amount of money that if I literally lit on fire, I'd be like, oh, whatever, I lit that on fire. That is the amount of money to put into these high-risk coins. Because the high-risk coins are like gambling. You're probably going to light it on fire, right? So then, it's like, okay, let's say I have $10,000, right? This example is for $53,000. So I have $53,000 and I'm like, you know what? This money's sitting in a bank. It's not doing anything. I don't want to buy stocks with it. I have enough. I don't want to buy real estate with it. I have enough. I'm happy to take this risk. And out of that, if I lost $5,000 tomorrow, doesn't matter. I make $5,000 in a day. Great. Then $53,000 is what I'm going to put into the market, right? Then I break it down into the risk ranges. Now I say I'm a low risk person. Then I'm going to put the vast majority of that money into low risk. So let's say I put 60% of that into the low risk range. I put 30% of that into the medium risk range. And as a beginner, don't even put anything into the high risk range. But if you do, nothing more than 10%, please. Nothing more than 10%. Because the whole point of structuring it like this is that the amount I put into my low risk portfolio is the highest likelihood of it making money and not losing my money. Which means if I put 60% in there, it just has to double for it to actually make my entire money back. And even if the medium and high risk went away, just that much would make sure I don't lose money. The medium risk range is there so it's likely to make more money, but the risk of losing it is higher. So if I put 30% there, it just has to triple basically for me to make my money back. The high risk stuff is like, putting it on black. It's like if it works, it's going to make me 10 times the money, makes my entire portfolio back. If it doesn't, whatever, $5,000 gone, I still made money on the rest of the portfolio, right? So we split it up into these kind of risk ranges. Then what I love to do is I love to do a visualization like this. Because most people are like, yeah, but I don't even know where all my money is, and I don't even know what I have. Like, it's in here, but I don't even know. It's so surprising seeing people go through this process. You can literally sit there and draw it out. And if you're like, hey, this is getting complicated, don't worry. We have a whole tutorial. You're going to get access to it. You can do this for yourself with the links and everything. But the idea is, you know, when you get to that point of how much money do I put in, then you have to zoom out to your whole net worth and go, hey, what do I even have? What are my houses? This is stocks. What stocks do I have? What bonds do I have? What financial products do I have? How much money do I give the financial manager? That's a lot of money, right? What property do I have? Is it residential? Is it commercial? Which one has the mortgages? How much do I owe on the what? How much value is sitting there? What do I have in crypto? Which exchanges is it on? How much gold and silver? How many ways do I make money? How many revenue streams do I have? How many inputs do I have coming in? Kabir's nodding because he's like, yeah, I got to really draw that one out. There's going to be 16 things coming in. No? And then how much cash do I have? Right? So it's drawing out your entire self, your net worth or your assets, and then strategizing around, okay, you know, I'll take some of this and I'll move it around here. Maybe I got a bunch of stuff sitting there going to waste, I'll move that around. And at least have a strategy around what it is, where this money is coming from, and to make sure that you don't just bet it all on black. Only take the right amount of risk in the space. Because stocks make 8 to 10% average. That's considered like an insane return. Real estate, the best places did like 20% over the best places. It did between like 10 to 20% across the world. Remember, they printed 20% of the money supply. So effectively, real estate breaks even. If you're making 8%, you're losing 12% value every year on stocks. Bonds are just completely useless. You make 4.5%, 4%. It's like, that's the old world stuff. Gold has lost money for a long time. Silver has lost money for a long time. Revenue streams, always making money. Cash, losing 20% value per year. Crypto has gone up 20x and then crashed 80%. Or 90%, right? Some of them go up 100x and then crash 80%. But still, over the long term, just Bitcoin by itself has been by far the best performing asset for the last 13 years straight, for 3 years, and then for 1 year, it's the worst performing asset. But even on the average, it still by far is the best performing asset there is, Bitcoin by itself. But understanding all of that, you go, okay, well, I'm happy making 8% on $1 million here. I got $2 million here. I'm happy making 10 to 20%, but I have a home. That's important. So my family has a place to be. That means if this thing does like a 10x over 4 years, I can just take 10% of my net worth and have a risk over here. And that should 10x within the next whatever, right? This is the thought process. Is it going to 10x? No, you're probably going to lose all your money. But this is the thought process that you're going through of like, what gets moved here? How much risk do I take? And then how do I spread myself out around this process? Then we get to the point of like, wait, I thought you said we were looking for why am I doing this? Right? Then you get a lot more clarity around, okay, right, so I'm a low risk person. I don't understand technology. I get that it's the internet, but why do I want to do this? Some people, so this is one of my favorite quotes. There are many things more important than money, but they're so expensive in life, right? Love, health, family, community, connection, care, time, right? There's so many things that are so valuable, but they're so expensive. They're way more valuable than money. So please do not make your goal to make a bunch of money. If that's the case, this process isn't really for you. This is for the people who are actually willing to have a bigger goal and actually stick it out. Because if money is your goal, what's going to happen is you're going to put in money. Here's how it always goes, right? People come, super excited, saw it on CNN, or a friend told me, or somebody said, come in, right? People come in, take a bunch of money, and you put it in, right? Let's say you put $100,000. You're like, $100,000. You buy some Bitcoin for $100,000. And then it says $100,000, and it says like 2 Bitcoin. Let's say you bought it at $50. It says 2 Bitcoin, and then above it says $100,000. You go to sleep and you wake up and it says $120,000. And you're like, I just made $20,000 in my sleep. Wow. Unbelievable. You go to sleep, you wake up and it'll say like $140,000. You're like, I am printing money. I am a genius. I'm a genius. It still just says 1 Bitcoin, but now it says $140,000. Then you go to sleep and you wake up one day and it says $50,000. And you get that, that feeling you get where like, your bones shiver. And you're like, and you don't even think I lost $50,000. You go, I just lost $90,000. Right? And the human body is like, I just lost $90,000 and I have 50,000 left. Run for the hills. Take the 50,000 and run. Right? And so you hit sell, and now you actually lost $50,000. Right? Whereas the person who's like, my goal is lifestyle. My goal is, my family. I'm going to provide a future for my kids. I'm going to start a retreat center that's going to heal people of their traumas. I'm going to build the XYZ of that. There's this big vision that the people have, right? For those people, they look at this and they go, great. I put in $100,000. It's at $140,000. Here's a trick. You didn't make any money, did you? It's not in your bank account. You didn't lose any money. Actually, what you did is you took $100,000 out of your bank account and you put it into this thing. So you're actually minus $100,000 the moment you do that in your mind, right? When it goes to $140,000, how much money do you have in the bank? Minus $100,000. And until you get that $100,000 back out and put it into your bank, you're at a minus $100,000, right? And so then when it goes up, you got to remember, hey, it's not the dollars that I'm looking at. It's the number underneath that says 1 Bitcoin or 2 Bitcoin. That's my goal. That's what I'm holding. And the reason why I'm holding that is because I want to buy my mom a house. And until I get my mom a house, this game's not done. And if it goes 140, mom didn't get a house yet. If it goes to 50, doesn't matter. I'm going to stick it out. I'm getting mom a house. I care about mom so much, I'm getting her a house. Then it goes, and then one day it says $1 million, and you go, great, sell, and then turn it into a house for mom, and you're like, now we made some money because mom has a house, right? So make your goals big, make your goals valuable, make your goals something that takes you through the tough times. Because this market, it goes this, like this, and if you just don't give up, then it goes like insane. And then at that point, you got to sell it and make sure you get mom a house. Because many people watch that and they go, I'm rich. $100,000. Now it says a bajillion fulfillion dollars. Like, I've never seen numbers like this. This is insane. And so then you go out walking around like you're rich and start spending money, but it then just overnight crashes again and all that money's gone, right? So make your goals big goals. Make your list risk, low risk. Please don't lose your money. A strong why can help you get through anyhow, and that's why these goals are so important. So then we get to the point of like, okay, how do I even, okay, I get it. This is just a bunch of computers connected together. That makes sense to me. I want a piece of the computers. I'm going to take low risk. I'm not going to put too much money. I'm going to have good goals. I'm not going to imagine I made money or lost money. I'm just going to sit until I get mom a house. But then what do I do? There are so many ways to invest in crypto. It's not even funny. There's going to be 1,000 things. It's going to be like, take money and stake it here. Take money and lend it here. Take money and XYZ here and all this stuff. The simplest thing to do is number 1, long-term investing. Hi, Ems. Nice to see you. Long-term money. That's what we're thinking about. So the long-term investing, sorry. If you're putting money, it's okay. Nice seeing you. As far as investing in crypto, the strategy that works the best for most people is to simply buy it and hold it for a long period of time and then sell it at some point. What most people do is they'll actually come in and they'll buy high-risk things. Please don't do that. Please don't do that. We just talked about the risk. Buy low-risk things. Buy things that are the least likelihood for you to lose money. Once you make money, then feel free to deploy it in something else. But until then, please just buy lower stuff. If somebody says to day trade, just don't. Please run for the hills. Only about 1% of the world's population has the right mentality to day trade. Everybody else should not day trade. Kabir in this room is probably the only person who can day trade. Good for you. I'm glad you're not doing it. But you have to have a very robotic and execution-minded mind to do that. Please don't do that. Especially if you're entering it the first time. When you're entering it the first time, the likelihood of you losing all of your money is almost 100%. So just putting it somewhere long-term is going to actually reduce that likelihood of actually taking a loss in the markets. And then all this pre-launch, ICO, all that stuff, if you can just explain to me in one sentence what that even means, then you're allowed to think about it, but otherwise, please don't touch any of this stuff. This is a very risky space, and it's very likely to get you hurt. So then, after this whole process of going, do I understand what this thing is? Can I conceptualize in my mind why this whole space is even valuable? Can I understand the risk that I'm taking? Can I really understand the risk that I'm taking in this space? Can I understand my goals and that I'm aligned with it? Am I even at the place to be able to think about entering this space? Then you decide your risk, your risk profile. You decide how much you're actually going to be able to invest, breaking it down into the different risk levels like we just went through. Writing out your goals. Literally, what is your strategy? Like, what am I going to put where and for how long and how? And when am I getting out? Right? That we're going to get to in a second. I just wanted to go through this beginning part because just that kind of preliminary thought process is the thing that most people don't go through. And most people don't understand that we're in the exponential age, which we just covered. Most people don't understand why this thing is even valuable and what's all the hubbub about. People don't understand what crypto is in and of itself. If this is the first time that you're hearing that crypto is a bunch of computers connected together, make sure you dig down deeper, because you have to understand the fundamentals of what it even is. Why it's valuable, why does it go up and down, how do I understand risk, all of that. Now, I'm not going to go through the rest of this. I'm going to go down another little rabbit hole. It's how to avoid getting hurt in crypto. Like we mentioned, 90% of cryptos are scams. They're legitimate scams. They're built by people who understand technology and understand how to pull you into a narrative and to get you to invest in something and take all of your money. Okay? If you threw a dart at a list of cryptos, you will almost certainly hit something that is a scam. Out of the 10% that survive, you need to understand which ones are the right ones, right? So here's some simple ways of thinking about how not to get hurt in crypto. In crypto, we have a rule, right? Never send your money to somebody else. Like, as a beginner, one of the simplest things you can do to not lose all of your money is don't send it to anybody else. If they say, I will double it, definitely don't send it to them. If they say, I'll manage it for you, don't send it to them. If they say, I'll stake it for you and I'll give you a yield, don't send it to them. If they say, if you give it to me, I'll lend it and I'll pay you back 15% per something, just don't. Please don't send your money to anybody. And this is where it gets a little confusing, because the old world that we're used to is a world where we have money managers and financial managers. So we're used to sending our money to these regulated institutions, and they invest it somewhere and it makes money, and then it all looks good. And then one day 2008 happens and they just go, sorry, you lost all of your money. That's the world that we're used to. But at least we have somebody to give money to and trust in that way. In this world, that's not the case yet, for a long time. So however long you're watching this, at least until 2027 onwards, there's no regulated entities to give your money to. You have to be responsible and understand the risk that you're taking, and you have to take your own money from your own bank account and put it into your own exchange and buy the stuff and custody it yourself and play the game yourself and then exit at some point, right? And if all of that seems too onerous, please don't enter the space. Please wait until there's regulated entities and all this kind of stuff. Because right now the regulations haven't been laid out in this space. So how do you not get hurt? A good rule is, please just don't send your money to anybody, period. Either you learn how to play the game yourself or wait on the sidelines. That's one of the biggest ways that I see people lose money. Another one is what we talked about. Don't buy garbage coins, right? There's this shiny object syndrome feeling, especially right now, where there's all these things popping up, and it's like, hey, you should buy this, you should buy that. Your friend comes up and goes, I just bought dog whiff hat. And you're like, dog whiff hat? That sounds, is that real? I'm like, yep, I just made $1 bajillion from dog whiff hat. And Rebecca's laughing because you're holding dog whiff hat, aren't you? And this is a real thing. It's literally a photo of a dog with a hat, right? And you might hear about it and go, that sounds like a good idea. You're whose money they're going to take, right? If like, there's going to be so many things that you're going to be told about in this space. Please just don't buy it. Please learn the game first. Only buy the safest things. And if you're like, Sim, why don't you just tell me the cryptos to buy? That's the other problem. Please don't just go on YouTube, pull up a 20-year-old, and they go, hey, buy XYZ. I know we don't have financial advisors, but also just definitely don't take advice from the 18-year-olds. You know, they all we know how to do is bet it on black, right? You have to understand how to conceptualize this and pick your own cryptos. Even if I tell you the ones that I would say to buy, first of all, I don't even know you. We haven't met. I don't know what's good for you and what's not. Even if I told you, you would probably still lose all your money. That's how this space works. If you don't know how to play the game itself, the vast majority of people just lose all their money. So the way you don't get hurt in this space is, first of all, you just don't participate unless you know what you're doing. If you haven't learned about the space, please don't just go buy it because people said it. You don't send your money to other people. Absolutely not. You either learn to do it yourself or don't buy it. You just don't buy garbage stuff. And then there's security and a whole bunch of other things to go through. So what I really wanted to finish off on was, this is the Elevation Barn podcast or meeting, right? EB's mission has always been to solve grand challenges, to help individuals be able to see a deeper reflection of themselves, align themselves to their North Star, understand themselves, know thyself at a deep enough level to be able to focus on that, and then go and solve the grand challenges. This is my way of solving a grand challenge. One of the biggest challenges I see is that some of the most caring, capable individuals that are actually at the place to create impact in the world are coming from generations who just don't understand all this stuff. Who just don't get it. Right? The baby boomers hold all the money, but the baby boomers are the people who get hurt the most in this space. So by sharing this information, hopefully you can understand how to participate in this space and not get hurt. On the other side, hopefully you have success in this journey and you're actually able to generate more value for the world, and hopefully you get compensated more value in the way of money back so that you can actually achieve that mission. But that's not even the potential of this technology. The money-making side of it is actually, it's misconstrued to be the only thing that this technology does. That is a method that, in the collapse of the currencies and the world, the way that it's going, it's a protective mechanism of transitioning to the new system, yes. At the same time, it is the technology that the beautiful new world is going to be built on. It's already being built on this technology. This world that we're moving into is a world of consciousness being digitized, us living in metaphysical spaces. If you're watching this on this VR thing, this is what I'm talking about. That we're moving into an infinite number of realities represented inside of a digital world where value will move seamlessly. And this technology is the value mechanism that will carry that value in that digital space. That's why it's digital money. But the real world implementation of this technology, that's where the grand challenges get solved themselves. That today, inequality and poverty and marginalized people are one of the biggest problems in the world. We need to uplift the people that do not have the ability. They've never been given the opportunity to uplift themselves. You know why? One of the biggest reasons is because they simply can't invest in assets. If somebody wants to buy a piece of the stock market, which makes you rich while you sleep, they can't. Somebody in Indonesia can't. People are cut out of the financial system, cut out of the investment world. blocked out from actually generating the wealth that would allow their children to live in a better place. Crypto, that's not the case. Bitcoin is the same across the world. Everybody could buy it. Everybody can participate. It's opening up the ability to access financial infrastructure across the world. That's one place. At the same time, this code, what we just talked about, it's a bunch of computers connected together, but it's programmed by somebody to do something. In the programming of the code is a level of fairness that's built in to say that, you know, if a guy in Indonesia, a farmer in the middle of Indonesia owns 0.1 Bitcoin and somebody in America owns 0.1 Bitcoin, they're treated the same. The code makes it so that one can't take advantage of the other. They're independent entities. The future of this technology is that as the world becomes tokenized, which we're going to go into a lot of more detail later on, this is just complete beginners. As the world gets tokenized, the world will be run, the value of the world will be run on these computers. And in the code of the computers will be a level of fairness that's coded in. It's immutable. Nobody can ever change it. The corruption of human biases will not be able to affect the fairness of the code that's actually built into these computers. That's a huge benefit, where we can code it to be more fair. I'll give you an example. We have a project called FarmSend. It's using a token to be able to ship commodities and food goods across the world. Right now, the farmers get paid the least out of the entire value of the good being sold in Dubai. Let's say we pick up corn from here, it sells for a certain price in Dubai, and out of all of that, the farmer gets the least amount of value. The middleman takes a piece, company takes a piece, warehouse takes a piece, producer takes a piece, wholesaler takes a piece, shipper takes a piece, and the consumer pays for it. And the farmer gets least. We're coding computers differently. That say, in order for everybody in the chain to make money, the farmer has to get paid 25% more than the market rate. The farmer has to get paid more in order for everybody else to get rich. Built it into the computer systems. So even when I die, the farmers will continue to be overcompensated in that system. We have a climate problem. The earth is being destroyed. Nature is being destroyed. Animals are being destroyed. Right now, nature is worth more dead than alive. A tree is worth more dead than alive. The problem is humans are not incentivized to keep the thing alive. With this technology, there's models that are being built. Now, yes, there's a dark side to this too, but here's the light side of it. That if you take a forest and turn it into a bunch of tokens, then anybody who buys the tokens is putting money into a pot that goes into protecting the forest. The forest sequesters carbon from the air. So now, carbon credits have become a way of generating value. Carbon is being priced, which means the forest sequesters carbon, which means it sucks in carbon and keeps it. The amount of carbon that it saves is the amount of carbon credits that you can generate. The amount of carbon credits is tied to how many dollars you can sell those carbon credits for, which means that's the amount of dollars that you can take and invest into the forest to protect the forest itself, to keep it alive so it can keep carbon coming in. A whale has been worth, just the whale oil and the meat, its whole life to humans in the markets. A dead whale was always more valuable than in the markets, was always more valuable than an alive whale. There's a new system, financial product that's being created around this to say, no, how about this? The whale poops a certain amount in its lifetime, and that poop turns into plankton. Plankton pulls carbon from the air, which means the value of a whale in its lifetime is $30 million of carbon being pulled from the air, which means a whale is valued at $30 million. So they did this with the Bahamas. By they, I mean IMF, and I know, just hear me out, okay? They valued the nature of Bahamas at $300 billion with this kind of way of thinking. And then they gave $300 billion to the Bahamas and said, you can't spend this. You can invest it. And if you make a return on the investment, you're allowed to spend that. So, maybe 10%, you make $30 billion. not a bad idea. Now, as long as you maintain your nature or grow your nature, you can keep that $300 billion. But if you reduce your nature, you get less money to play with. Now, out of that $30 billion, I bet some of it's going to go back to protecting nature, right? So there's these models of new systems that are coming out that are going to incentivize the protection of nature itself. That's a good sign. The dark side is that means the control and ownership of nature is going into the hands of those who own the tokens. And hopefully we have good people building the code to still maintain a level of fairness in the process. There's going to be real world asset tokenization, where businesses, property, nature, experiences, communities, even people are going to tokenize themselves. Where like right now, you know, if Rebecca wants to do amazing things for the world, Rebecca's got to go out and just work hard and earn this thing called money so that she can deploy herself. In this future world, you could put out a call to the world and say, I'm going to issue the Rebecca token, right? And if you invest in me, I will go do this good for the world. And then whatever money I generate from that, I'll pay you back a piece of that money. Support Rebecca in that mission. Artists, right now there's so many good artists that just can't find the funding to launch their albums and launch their art projects. In this future world, the artists they won't have to beg the record labels to be able to support them. They can reach out to their community and say, hey, support me in funding this album, and I will support you back from my tours and my performances and, you know, the success that I achieve along the way. And there's going to be there's charities which right now are actually constantly having to raise money, and people get charity fatigue. In this future world, those charities will be able to issue a token to raise that money, and then whatever value the charity generates for the world can be compensated back to the people that are investing in the token, right? So there's so many different new ways of thinking about the world's problems that can be solved with this technology. Now, I know we went from complete beginner and we just went to the tokenization end curve, and if your brain hurts, I'm really sorry about this. Trust me, our head, I'm really not. Exactly, just please pause it and repeat it. And we're going to just keep repeating this until it makes sense. But that's the idea, that there's a completely new world that we're living in this exponential age where change is happening at an ever-expanding rate. Technology as a concept is shifting to the next stage of the internet. The computers are being hooked up in a completely new way. Let's just give a little recap. We're going from the centralized age to the decentralized age. There's a new set of computers that are keeping account of the world's wealth, but also the world's value generation mechanisms. It comes in waves and dips. It's like riding the oceans, and we'll show you an analogy later on that helps you understand that. If you understand that you have a certain risk profile in participating in this shift, and you can understand what your risk profile is, and you can understand what risk you're taking in this transition and how much you can digest and how much you can actually participate in. If you can not take too much risk yourself and do not invest money that you're not willing to lose, and you can lay out the risk profiles and percentages according to everything that we went through, and be able to make it a holistic part of your plan for life, then set some goals that are big goals. Because there's a beautiful world being built, and if your goal is to build a beautiful world, this technology can help you. But if your goal is to get rich, this technology is probably going to lose all of your money. And that's it. And the rest we'll go through at a later time. I just wanted to whet everybody's appetite on this. So I would love to hear questions or concerns. Do we have anything online, guys? Can you repeat the market cap to risk? Okay, that's a great one. So let me even give you an even deeper reflection on this, because I didn't go through this part, but if you're asking the question, we can get you some more details. So first of all, if you imagine that the crypto coin that you're buying, the risk of you losing all of your money is very high unless you can figure out a way to reduce the risk. You can rely on other people's analyses who've done that risk analysis probably with a lot more resources, and rely on their reflections to be able to understand what risk you're taking in the markets. So when you look at Bitcoin is valued at $1 trillion today. The market says if all the Bitcoin sold, it would be worth $1 trillion. That's what the market cap is, $1 trillion. If the world is valuing it at $1 trillion, then realistically, there's probably about 100 to 300 billion dollars that somebody has actually put into Bitcoin. The world has put into Bitcoin. Because 300,000 million dollars have been put into it. That's what $300 billion is. You can rely that the people who put that much money in there have done their due diligence well for them to put that much money in, which allows you to understand, okay, then if I put my money in, hopefully it's not as high as a high risk play, because why would somebody else put $300 billion of their money in if this was something that was going to lose all their money, right? So the higher the market cap, the lower the likelihood of you losing all of your money, which is risk. Now, the way, we've spoken about it is, I would say, let's say $50 billion market cap and above. When you look at a crypto's market cap, if it's $50 billion and above, then I would consider it a low risk crypto. And that should be, usually it's around somewhere around the top 30 cryptos tend to be around that range. Probably even less depending on the market timing. 50. Okay, great. So right now, there's 3 cryptos that are considered low risk. So 50 is for anybody who, that's like the safest version. Above 20 billion in today's market cap prices, I still consider to be low risk. Which one's 20 billion? Where do we get to 20 billion? Yeah.
And that's 16.
Okay, so let's say right now, like the top 5 are low risk. So that's the idea. Above, let's say, $20 billion.
50 billion, 5. It comes from USDT, which is another one, or 4. We have sold. Then above 20, you have 10.
Okay, so the top 10 are above $20 billion in today's prices, right? The idea is, okay, $20 billion and above is low risk. $1 billion market cap to $20 billion market cap is what I consider to be medium risk. That there's a medium risk of you losing all of your money, but also they're safe enough that the market has valued them over $1 billion. Anything below $1 billion is high risk, which means the likelihood of you losing all of your money is very, very, very high.
Billion is 77 assets.
Okay.
From which you actually use a couple of meme coin and the stable coin.
No, so at this point, I'm not judging meme coins. I'm not judging it. Yeah, stable coins, sure. But at last time, I had, certain. I kept the jokes out. This time around, I'm like, look, the jokes are making money, right? So yes, if you believe that, because memes are culture, if you believe that that's something that could be valuable, sure, but the likelihood of you losing your money is very high. So what I actually wanted to show you was this. So beyond just that analysis of looking at the market cap, here's a bunch of details we go through to really reduce your risk in cryptos, right? And I'm building an AI that you guys are all going to have access to that'll simplify this whole process. So please bear with us while we're doing that. But once, let's say, now I say, okay, I have top 10 cryptos that are low risk because they're above $20 billion. Those are my candidates. Okay, let me take out the 2 stable coins. because they're just dollars. That means I have 8 candidates left. Okay. Then let me go and do the white paper check, which is, read the project's white paper, make sure it has clear goals, look for a problem and solution. In today's world, you could just download the white paper for the project, feed it to ChatGPT and say, hey, read this white paper and do all of this. With the AI I'm designing, that's going to be the process. You feed the white paper, and I have a preset bunch of questions that you can ask, or you can ask it your own questions. And do a check to make sure that you can, in simple terms, understand what this crypto even does. What is the value mechanism, and why is it valuable for the world, and why is it going to be more valuable in the future? Therefore, I want to buy it today. Then we look at the team, go through the team's history, the track record, what they've done, have they been involved in any scams? Then we look at the tech, but just well enough that you're like, okay, I can understand what this technology is, what it does, why it's valuable for the world. If you're like, how do I do that? We're gonna teach you all of that stuff. Today is just very intro. Then we look at the market and trading. Again, a set of questions that I'll give you that you can actually ask an AI. Then we look at danger signs to see, hey, are there things that are built into this thing that could make it fail? And then we make sure that it's compliant with the laws. Doing that analysis and then following that market cap thing makes it much, much more likely that you will not lose all of your money. But thank you for that question, Sam.
On that exact thing we're talking about.
Can we get on the mic, please?
Yeah, I just wanted to ask about Luna and how to prevent that. I mean, we didn't really know that was going to happen. I wasn't even in Luna, but I'm looking at some, research on it. I know you were like, yeah, no, but why? Where in this would the red flag have maybe appeared?
How did I know Luna was a scam?
And how do we know which ones
First of all-
could be now?
First of all, the founder had already lost everybody's money on a previous project. The founder had started a project and it blew up. He launched a stable coin and everybody lost all their money. I think it was like $50 million he lost the first time. Nobody listened, right? Then so the team investigation part, they failed, right? The white paper check, they would have passed.
Mhm.
The tech and innovation is where they really failed. Because Luna by itself, I was like, okay, founders have failed before. I'm gonna give them that. But the tech was that they created a coin out of thin air, like all these coins are, and then the market valued it at a certain few $1 billion. Fair. Then they started a stable coin called UST,
Yeah.
and then they backed the UST with this Fugazi coin. That's when I was like, so sorry, wait a minute. So you're saying those dollars are the equivalent to dollars, but you just made up this coin and you backed your dollars by this made up coin.
The UST was made up.
UST was made up, but Luna was made up too, right? It's like me saying like, hey, I'm making up in my head this thing. It's on a computer. I made it up. I typed it into a computer. Now I'm going to make dollars. And the dollars are collateralized and backed by this thing that I made up last night. You'd laugh me out of the room, right? You'd be like, what kind of crazy thing is that? These guys did that, right? And then by that time I was already like, get away, everybody get away. And the thing, and it pumped like crazy, which is another sign. But then you could just see like, wait a minute, everybody's taking their dollars and they're trading them for this thing called UST.
Yeah.
And in order to trade it, you have to go through this exchange that's built on your system and is backed by your coin. But if the value of your coin drops and you're saying I have $20 billion of dollars backed by $50 billion of your coin, but if your coin becomes worth $10 billion, you don't have anything to pay out the people. And when that happens, the scam is done, right? And so Wall Street arbitraged that, and they could understand like, hey, all I have to do is I have to put a bunch of money into this thing, and I have to buy a bunch of these coins to pump up that to make that out of balance, and then everybody gets scammed, right? So all of that kind of stuff. If you talk to the people in the industry, we were all just laughing. We were trying to keep everybody out of it. Can you take the mic, please?
I was going to say, case in point, that one check isn't enough because they had a 41 billion market cap at some point, but you just have to keep digging deeper, right? Like you said, they wouldn't have passed the team investigation. So
Yeah.
What was the interest rate on
20% interest rate.
That's it.
There, yeah,
That's it.
exactly. That,
Well,
that
I'm,
was,
gonna, I'm gonna give you 20% if you just lock your money into my system. That smells bad. Danger sign.
yeah, literally, if somebody says, I'll give you 20%, you give me cash and I'll give you 20%, then you ask them the next question, why isn't Wall Street giving you all their cash? If they make 8% to 10% on stocks, why wouldn't they just give you all of their money, which means it's a scam, right? So there's a bunch of these ways of looking at it. And again, assume everything is a scam because the 90% of them are scams. So like always assume, to me, Bitcoin is a scam. It's just a scam that works, right? We just talked about how Bitcoin is just entries in a book on computers that are running across the world. Like this is, I'll say it here because I'm sure most people haven't heard it. It's made by Satoshi Nakamoto. Satoshi in Japanese means wisdom or intelligence. Nakamoto means the ones who live in the center of Japan. Central intelligence. That's what Satoshi Nakamoto means. Do you think it's made by the Central Intelligence Agency? I don't know. I feel like that could be something that could be, and it's made a technology called blockchain that everybody thinks is going to give them freedom. It's called blockchain. It is a means for us to transition through this phase of the world where the old world is completely like a burning ship, and this is a life raft. But this isn't the end goal and the end game. Right? Our children are now being put into a world where technology is soon to be suction cupped onto their faces, and money is becoming digital, and all the doors are closing. And in the middle of that, this is just a means for us to have the capability to be able to have our feet on the ground and experience nature in its rawest sense. I know, baby. I know you're laughing about this because like we talk about this constantly. So sorry, that was a long-winded way of saying this is how we can reduce the risk profile. That's a great question. Could we? What's another question that we have? I know you have a question. Please take the mic.
I think one of them is
One
the
second.
next. Oh, sorry. One of them is the next model, the exchange. And the first question you almost answered because I wanted to know who owned the Bitcoin. We pay to who,
Right.
So,
So that's a good question.
sorry.
Who owns the Bitcoin?
Yeah.
Nobody.
Nobody.
Just a bunch of computers.
I mean the servers. I'm talking about the main servers.
People and companies and there's people and companies running computers.
Hmm.
A large amount of the Bitcoin network is owned by companies,
Hmm.
miners, mining companies. They run computers, and whoever owns the computers owns the processing power of Bitcoin. There's a bunch of people running it.
Hmm.
There's groups of people doing it.
Just specifically.
Can you please speak on that?
Okay, Bitcoin is plain stupid because the name of the token is the same as the name of the network. So there's the Bitcoin network that is being operated and decentralized between millions of computers. Some of them are owned by companies, on which we run a ledger that count the Bitcoin tokens. But stupidly, they have the same name. So who owns the tokens? Well, anybody who has a wallet on the Bitcoin network that has a non-zero balance of Bitcoin owns Bitcoin tokens. Who owns the network? It is decentralized amongst a very large number of computers. You can run a node and contribute to the security of the network. And then there's the code. And that code it's a foundation, I think, or something like that. Basically, there's a bunch of people who are updating the code, but only based on voting on stuff that have been voted by the people who own Bitcoin. So when you own Bitcoin and you are part of or you are running nodes, you are contributing to the code. But basically, the network itself, everywhere, nowhere, everybody, nobody.
single computer that is connected to this
Yeah.
cloning part.
Yes, every computer that is connected to the network
Hmm.
is contributing to the safety of the network.
I see. I see.
Sorry, so one really good question that just came up is, what is the best way of diversifying within crypto other than risk levels with market cap? Similar to stocks, being diversified into different sectors such as tech, healthcare, and consumer staples. So you do it exactly the same way, Sam. It's basically you pick the sectors of crypto. Hi. Sit. Hi. Nice to see you. You pick the sectors of crypto that make sense to you. So one is looking at the layer ones of crypto, that is the computer networks themselves. That's your, I'm not even going to name all of them because people are going to go out and buy those. Layer ones are the computer networks themselves. It's only the physical the infrastructure that's running the processing power. Layer twos are a sector which is technology that makes those computers run better. That's like its own kind of sector. There's DeFi, decentralized finance. If you believe in that, then finding some of those products are going to be great. The artificial intelligence wave just happened on in the crypto space, just like everywhere else. So there's AI as a sector, real world assets as a sector that's coming up a lot, and it's probably going to be this next wave. Gaming is another good one, and then a really hot sector right now is called DePIN, DEPIN, decentralized physical infrastructure, which is not just the computers themselves. It's like the routers and the cables and all of the things that are actually running the physical infrastructure, sensors and other things. So that's another great sector to look at. And then there's a sector called meme coins. Those ones are just jokes. So, you pick the sectors, and what you can also do is you can go into CoinMarketCap and go to categories and see which sectors are performing how. So that's kind of how you would diversify. But even within those sectors themselves, you're going to see the risk range of the coins. So please just, within the sectors, be careful about picking the lowest risk versions of the coins. I'll be honest, diversification for me hasn't been, what it has been in stocks. Because in stocks, it's like you can just go buy an ETF and you get exposure to a bunch of different stuff, and your risk is reduced. In crypto, it's the landscape is so dynamic that one day you're investing in layer one cryptos and you think, okay, this is going to be great. Next day, a piece of regulation gets released and that entire sector falls apart. So what I tend to do is I tend to just pick about 5 different plays, different sectors, and pick the lowest risk versions from each sector, and then follow along on those. Because if you end up picking too many sectors and picking too many coins, it gets too discombobulating, and then you kind of get lost in the space itself. But those would be the main sectors to own. Thank you, sir. Sorry. What was the next question?
That'll be the next model. And it's like very straightforward question about the exchange. Very straightforward question about the exchange. How the process? I mean, like, we just push a button, we just write down that this is my profit and just send it to my bank account. Is it like working?
I'm not telling you.
Okay.
I'm just kidding. So
A main question is like, it gonna be any, like, right now, is there any applicable tax applying to that amount of profit?
Yeah.
Is it like practicing right now, or?
So we're going to go through all these details in the next talks, but let's just go through an overview. So the way the process works is that you're able to transfer your money from your own bank account to an exchange, which is like any money exchanger in a foreign country, right? You would register an exchange, either a local exchange in the jurisdiction that you're in or a global exchange. And then you transfer your money from your account to your own exchange account. The exchange account then has dollars sitting in it or euro sitting in it or whatever you like. Then you can make a purchase inside, right? You pick the crypto, you hit buy. From that moment onwards, whatever amount of profit that you generate is going to be taxed for capital gains. So let's say you buy, $100 of Bitcoin, and then it doubles in price. It goes to $200. You hit sell. You've made $100 of profit, and you get capital gains tax on that in certain jurisdictions. Like, in Canada, in America, in most of the Western places, you get capital gains tax. In Indonesia, we don't have any of that. So we have 0.1% tax on the total amount that's sold, right? So what it depends on is where your tax residency lies, which means where are you living, but also we're going to go through those details, but it's where is your tax residency, right? Which tax laws apply to you? For a lot of the world, it's capital gains on that. For some parts of the world, it's zero. For some parts of the world, it's not a capital gains. It's just a fee that gets charged on top, right? But so now, once you hit that sell button, those dollars are going to show up in your account again, right? So it's $100, turn it into $200. You have $200 show up. Out of that, you can hook up a software to be able to track how many taxes you need to pay for your jurisdiction, and then you pay that out as dollars. For most people, what happens is they put in $100. And then, crypto drops and they see the $100 go to $50 and they just leave with their $50. 95% of people have that experience. The other side, 5% of people actually have the experience of, being profitable in the markets.
Thank you.
Thanks. What is your recommendation on how to prepare for unexpected situations in the world, such as possible retaliation by Israel against Iran and recession, lack of interest rate cuts and inflation not going down, etc., and its impact on the crypto world? Sam, you got some good questions. We gotta meet up, my friend. My plan is this. In this last run, as crypto went up, we took a bunch of profits. And now when Israel and all of this stuff is happening, the world goes into a chaotic state, so assets drop. Let me even give you a more simple reflection. The chart we looked at, which is a money printing chart. Let me actually pull that up again. That chart predicts the chaos that is coming into the world and when it's coming. As far as I'm concerned. If you've seen that movie, Leave the World Behind, which is on Netflix, right? He says something specific. He said, how did you know the world was going to go to shit? And the guy goes, the markets told me. This is how the markets tell you. So I've been saying for the last, ever since we found this graph, that middle of 2025, chaos is coming. And you guys know, we literally rode the wave up. And now that everybody's thinking we're going to $100,000 Bitcoin, we sold it because we're like, chaos is coming. And we could tell that that's when the money printing needs to start. So going forward, I would, according to this analysis, by the end of 2024, this all heats up to a massive, massive degree. So what do? We buy low and sell high. Now crypto's gone up, so we sold high. All of this chaos starts, what people are calling World War III starts, assets drop. We put cash in, right? At the same time, you got risk of recession and banking crisis and all of this stuff. I take out my cash and I put it into my own pocket as USDC. And then when the markets drop during the chaos, we buy it all up. And then that chaos is used as the excuse to print all of this money. Because remember, they have all these debts to pay, right? This blue line is them having to pay their own debts. They have $8 trillion of debt that needs to be paid. And actually, this is cut off on the side because this should say 8 trillion, and this goes up to 16 trillion. They have $8 trillion of just interest to pay on their debts. So they need an excuse to print all of that money. These wars and all of this chaos is the excuse they use to print money, which means crypto goes to insane levels. And if this is right, then by 2025, somewhere around the beginning part, the first half of 2025, something massive hits. If I had to bet money on it, I would say something like mutating AI cyber attacks, or some crazy thing happens in the world. So they have to print even more money to save the world per se. So the way I prepare is I buy assets when there's chaos happening, and then sell them when everybody thinks that they're getting rich. But these are great questions. And plus, live in Texas. I think that's one of the best ways to invest. Live in a place which is ready in many different ways, where people have the ability to be self-sufficient, and people, the community is still alive in the world. and there's a self-sufficiency aspect to it. You know, living in Bali has been one of the best decisions I've ever made in my entire life. Coming here during COVID, the way we saw people, the Balinese, the foreigners, everybody, the way everybody reacted to COVID, to the sky falling, was it reminded me of the capability of humans and the love that we have. People started praying more, people started loving more, people started coming together more, zero homeless people on the streets because everybody went back to their villages and they started feeding each other. And the people, the foreigners that were left here were these like super passionate, super engaged individuals that are focused on creating a better world, right? So places like that in the world, as long as you're living in places that are anti-fragile and they increase in cohesion during the chaotic times, that's one of the most important things you can do. Also, self-sufficiency, growing your own food, having your own water, having your own economy, self-sufficiency in the terms of assets, learning how to take control of your assets back. You know, I've posted this in the EB group many times, but please read The Great Taking, the book, thegreattaking.com. It's a book and a documentary. It's made by a hedge fund manager who knows money better than all of us. And they explain how within the next few years, there's going to be a process of the confiscation of stocks and bonds, real estate, all of these things we've already seen for the Russians. It's coming to a theater near us, right? So in that process, becoming self-sufficient, no longer, you know, I don't trust banks to hold my money. I self-custody it. And then I put it in a bank when I need to spend it. I don't trust financial managers to make me rich. They make themselves rich. If that was their job, we would all be rich, right? So then we invest ourselves into assets and so on and so forth. I could go on for days about this, but we gotta sit down and talk. Sam, you got really good questions, man. I can't believe you're doing this without uttering a sound. This is so good. You got any more? We're gonna close it off in a few minutes. Pardon? No. So thank you. Appreciate you guys. Thank you for being here. Hopefully this was fun. We're going to do this a lot more, and we're going to go through the rest of these steps. And along this journey, this process that we're going through is actually a process that I've taken a bunch of people through. We've turned that into a free process, which you're going through, and we're building an AI that's going to be there to explain it in very simple terms. All of that's going to be brought to everybody who's participating and everybody who cares to go through this journey. And we appreciate your time and energy. Thank you guys for being here. We'll see you in 2 weeks. This is going to happen every 2 weeks. Don't worry, it's not just going to be me talking every time. I know you get bored. We're going to bring some other English-speaking crypto heads. Hopefully we can find those. Until then, we really appreciate your time and energy. Much love, and we'll see you again.